And so now jumping into the investment process, it's about understanding yourself, right? And for us, it's about understanding our investors. So one important indicating factor that really affects how we approach investments, tax strategies, finances is how old we are, right? When we're earlier on 20s and 30s, we can take a lot more risks. And that means that we can invest into riskier ventures like hedge funds, for example, venture capital, etc. And so that's why it's a very aggressive portfolio, really focused on growth investments, the upside story. As we enter into the 40s and 50s, those are our peak earning years. That's when we start looking a little bit more towards retirement. How do we mitigate our taxes now that we are earning so well? And medical expenses coverage for us and our loved ones, right? Our family at this point, we might be married, have kids, etc. And we're a little less aggressive now because we have kids. So we can't just YOLO into some Wall Street memes stock or a crypto coin. But a lot of the fundamentals stay the same in terms of finding growth assets, passive income generating assets, and assets that are more tax advantaged. And then as you get closer to 60, 70, you start getting to retirement age. There, your financial objective is less about the upside story, and it's a lot more about how do I predictably maintain what I have built and then pass it on to my loved ones or the causes that I care about. Your risk profile is typically more conservative. And at this point, instead of investing into a hedge fund or into venture capital, you're investing into more private lending, private credit, into bonds, CDs, equities, maybe some real estate as well. And so this is something that we prioritize when we're talking to our investors, existing and new, is where in life are they? What are their financial objectives? And these are the same questions that you as an investor should be asking as well before you start looking at any investment is what am I trying to get out of an investment?
Yeah, and what we find with a lot of our investors is that they might you're coming from the W-2 world, and so you're exposed to a lot of the public markets, equities, maybe some bonds, but not much else. And it's really eye-opening to be able to see different types of investments outside of that, and chiefly private equity, but also hedge funds and the like, that the ultra rich, frankly, have been exposed to. So we want to expose our investor base to all those, the plethora, the wealth of opportunities that they could invest in before they get to an age where, and maybe an income base where they can start looking into that. So we're excited to be able to share that with you.